So in today's video, I'm going to be revealing my entire Robinhood portfolio to you guys. This portfolio has gone through a few iterations, but I think I finally got it to where I want it. Now, I am primarily a long-term investor trying to build up my dividend portfolio so I can eventually live off of it. And as for my growth stocks, I do plan to hold them for the long term, but eventually I do want to get into the investment real estate business. So if I see an opportunity to do that, I am willing to sell out of those positions. Now with that backdrop in mind, let's get into the video. What's up everybody? My name is Daniel and welcome back to my channel. Now before I get into my portfolio, I should say that just because I own a company doesn't mean that you should. So please do your own research when investing in the stock market. I make these videos for entertainment purposes only, so please don't take this as financial advice. Now, without further delay, let's get into the portfolio. So my portfolio is valued at $195,480, and I'm actually down for the day. I'm down 2%, and on the week I am down 1.56%, which is $3,000. And it's just my luck that on the week I decided to film a review video that all my stocks decided to tank. If you look here, I was actually up I was past the 200K mark at 203,000, but the market decided to go the other way. Anyways, for the month, I am down 1.64%, which is 3,000. But on the 3-month period, I'm actually up 28%. On the year, I'm up 50%. And all time, I'm up 51%, which is $66,570. Actually, this is a great example of why you should take a long-term view when investing in the stock market. I may be down for the day or the week, but if you zoom out and for the year or the lifetime, I'm actually in the positive. This is why I utilize the dollar cost averaging strategy, which means I invest $400 a week into my portfolio. And as we go through my portfolio, I'll show you which companies I actually buy every single week. So I'll be going over my dividend stocks first. I actually have a video all about dividends. If you want to go check that out, I'll leave it in the description below. Now, the first stock is Microsoft. Oh, and I'm not going to go into detail about every one of my companies, but if there was one you want to see a deep dive of, just let me know in the comments and I'll make a video on it. So for Microsoft, I own 95.7 shares of Microsoft, which makes up 10.53% of my overall portfolio. And I have a total return of $5,349, which is a 35.74% total return. And Microsoft is one of those companies I invest in every single day with that $400. And I invest $40 every day into Microsoft, which makes up $200 per week. So for Microsoft, I don't think I need to say too much about it. They're one of the biggest companies in the world. We all know about their software suites that they offer. Now, the interesting thing is they are looking into buying TikTok. Now, I don't really know what they know about social media, but I can only see this as a boom for their earnings because it will bring in a younger crowd that Microsoft has been lacking. Now, the second stock in my portfolio is Visa. Now, for Visa, I own 15.9 shares of Visa, which makes up 1.63% of my overall portfolio, with a total return of $644.27, which is a 25.83% return. Now, Visa is another company I don't think I need to talk too much about. They're one of the biggest financial services companies in the world, known primarily through their credit cards and debit cards. Moving on to the third company, which is McDonald's. So for McDonald's, I own 2.19 shares of McDonald's, which makes up 0.23% of my overall portfolio, with a total return of $43.37, which is a 10.74% return. So McDonald's, as you can see a trend developing here, is another company I don't think I need to talk too much about. They're one of the biggest fast food chains in the world. We all know about their Big Macs and McFlurries. But the interesting fact is, McDonald's is also known as a real estate business. They own every single restaurant that they franchise out so that they collect rent from every franchisee as well as royalties. I thought this was a pretty interesting fact, but I have become a financial nerd in the last few years. So now this next stock is a favorite amongst many dividend investors, and that is Johnson & Johnson. So for Johnson & Johnson, I own 12.83 shares of Johnson & Johnson, which makes up 0.99% of my total portfolio, with a total return of $57.78, which is a 3.13% return. And as you guys can see here, I have a recurring investment of $20 every day going into Johnson & Johnson, which is $100 out of the $400 that I invest into the portfolio every single week. Ooh, that was a tongue twister. So Johnson & Johnson is considered a dividend king, which means they've paid out their dividends and grown it for 50 plus years. This makes it very enticing for all dividend investors. Also, I think Johnson & Johnson is a great play here if you're looking into buying a company that's developing a vaccine or cure for the virus. This is not because they're the closest to developing the vaccine or cure. It's only because they have a lot of products to fall back on if they don't. You don't want to buy into a company where their profits rely on just one product. And moving on to my next company, which is Coke. So for Coke, I own 52.5 shares of Coke, which makes up 1.3% of my total portfolio. And I have a total return, I have a loss of $186.86, which is a loss of 6%. So continuing the trend here of companies that I don't need to talk too much about. So Coke is known for, Coke. And they also own a lot of other beverage brands, including like Sprite, Fanta, Powerade. But the most important news that actually came out this week is that Coke is launching a hard seltzer beverage. They are trying to encroach into a space that is dominated by White Claw and Truly right now. And they're calling their brand Topo Chico. So keeping this train moving, my next company is Zoetis. So this is probably a company that most of you have not heard of. Zoetis, I own 10.85 shares of Zoetis, which makes up 0.89% of my total portfolio, with a total return of $249, which is a 16% return. As you guys can see here, actually, I have a dividend incoming in September 1st for $2.17, which comes out to 20 cents per share. So Zoetis is actually the biggest producer of medication and vaccines for pets and livestock. They're a great company to try and capture the concept of humanization of pets, which just means people are treating their pets like humans. So they are actually buying the best foods and best medications for their pets, which in turn really benefits Zoetis. Now moving on for Zoetis, which is probably going to be the only exciting company in my portfolio that you guys have not heard of, because my next one is Nike. So for Nike, I own 10.28 shares of Nike, which comes out to 0.54% of my total portfolio, with a total return of $47.54, which is a 4.75% return. So for Nike, continuing with the trend of companies I don't need to talk too much about, they're one of the best known brands in the world. They recruit the best athletes from every sport. So I see a bright future still for Nike, especially since they're still growing in China, even with this tension that we have. Also, since they took their stuff off Amazon and decided to sell to the consumers directly, I can only see their profit margin increasing from this point on. Now, going back to another company that many dividend investors love, that is Realty Income. So for Realty Income, I have a dividend incoming from Realty Income on August 14th for $38.91, which comes out to 23 cents per share. Now going back, I own 168 shares of Realty Income, which makes up 5.48% of my total portfolio, with a loss of $1,150, which is a loss of 9.81%. As you guys can see here, I have a recurring payment for $20 a day for Realty Income, which comes out to $100 out of the $400 that I invest every single week. So the reason a lot of dividend investors love Realty Income is because they pay their dividends every single month. They've literally trademarked the phrase, the monthly dividend company. So just a little background on Realty Income. They are considered something called a REIT, which just stands for Real Estate Investment Trust. A REIT just allows people to buy into real estate without having to own an actual property. So buying into the stock means you own a piece of property. That's just a simple explanation of what REITs are. If you want to know more about it, leave it down in the comments below and I'll make a video specifically on REITs. Now, this is the last dividend stock I own in my portfolio, which happens to be the largest holding that I own in my portfolio, which is Abbvie. So for Abbvie, I actually have a dividend incoming on August 14th for $591.56, which comes out to a $1.18 per share. So going back, I own 502 shares of Abbvie, which makes up 24.18% of my total portfolio, with a total return of $3,020, which makes up a 6.92% return. And as you can see here, I have a $5 recurring investment every single day on Abbvie. This is because I hit an arbitrary number that I wanted for Abbvie at 500, but I didn't want to stop investing, so I just decided to do $5 a day. So for Abbvie, I've actually talked about it a lot in my dividend video, so if you want to hear more about it, go watch that. But to go over it quickly, they own a drug called Humira, which is the best-selling drug in the world, but that patent is about to expire in about a year. So a lot of investors are very wary of the company, but I'm still very bullish because they have a lot of promising drugs in their pipeline, and their recent acquisition of Allergan can really offset the loss of Humira. So I still like this company. Now that's it for all the dividend stocks in my portfolio. I'm going to move on to the growth stocks. Now the first two companies I've already talked a lot about in a separate video about growth. I'll leave the link down below if you want to go check that out. So I'm just going to quickly go over it, but I'm not going to explain too much of that company. So the first company is DocuSign. And I own 220 shares of DocuSign, which makes up 23.37% of my overall portfolio. And I have a total return of $23,157, which is a 105% return. So just quickly, DocuSign is just a company that primarily operates in the electronic signature space. So the second company that I'm not really going to go over too much is Shopify. So Shopify, I own 50 shares of, and which comes out to 27.28% of my overall portfolio, with a total return of $25,945, which is a 97.18% return. And quickly going over Shopify, they're just a player in the e-commerce space trying to take on Amazon, basically. So the third growth stock in my portfolio is Teladoc. I own 25 shares of Teladoc, which makes up 2.53% of my overall portfolio, with a total return of $369, which comes to a 8.18% total return. So Teladoc actually operates in the telehealth sector, which means you can avoid the in-person interaction with your doctor by doing it over the phone or the computer. And just this week, Teladoc announced a merger with Livongo, which focuses on the chronic illness side of like diabetes and hypertension. This helps Teladoc expand into a more whole person care business and not just a company that people see as a phone call to their doctor. Now the final stock in my growth portfolio is a complete speculative stock, and that is Lemonade. So for Lemonade, I own 30 shares, which makes up 1.04% of my total portfolio, and I'm at a loss at $372, which is a loss of 15.65%. So I bought into Lemonade because I always try to have an eye on the disruptors to any kind of industry. So Lemonade operates in the insurance space. Right now they offer renters, home, and pet insurance. But what makes them different is that after they pay for their work expenses and salaries, any money they have remaining, they will donate to a charity. Because of Lemonade's focus on giving back to the community, I actually see a lot of younger generation, particularly the millennials and younger, flocking to this company instead of going to the old incumbents. And that is all 13 stocks in my Robinhood portfolio. Let me know in the comments below which ones you've liked or disliked. And if you enjoyed this video, please give it a thumbs up and consider subscribing if you want to see more videos from me about my portfolio or investing in general. And if you want to get started on your investment journey with Robinhood, I'll leave a link down below. If you sign up with that link, you'll get one free stock to get you started. And with that, I want to thank all of you guys for watching, and I'll see you in the next one. Peace.